Cryptos will overtake banks. SVP, Silicon Valley Bank, Falter. Centralized bank failure. The news of Silicon Valley Bank collapsing a day ago has Americans infuriated, namely those that banked with the bank. It's rumored many of the deposits with the bank were uninsured. While it's very soon after this happened, it certainly shows another reason centralized banks may become less desired options for folks while decentralized options and cryptocurrencies become more prevalent. Cryptocurrencies have been growing in popularity over the last decade, and many believe that they have the potential to overtake centralized banks in the future. While it is still unclear whether cryptocurrencies will ultimately replace traditional banks, there are several advantages that they have over centralized banks that make them an attractive alternative for many people. Decentralization. One of the primary advantages of cryptocurrencies is that they are decentralized, meaning that any central authority or government does not control them. This makes them less susceptible to political or economic factors that can affect traditional currencies. Decentralization also means that cryptocurrencies are not subject to the same level of regulation as traditional currencies, which can be both a positive and negative aspect of using them. Lower fees. Another significant advantage of cryptocurrencies is that they often have lower transaction fees than traditional banks. Cryptocurrencies are revolutionary as they enable direct transactions without the need for any third party such as banks or payment processors. Instead, they rely on a decentralized network of computers to verify and process transactions. This means that transaction fees can be significantly lower than traditional bank fees, which can be beneficial for people who make frequent transactions. Faster transactions. Cryptocurrencies also offer faster transaction times than traditional banks. Transactions on the blockchain network can be processed in minutes, whereas traditional bank transfers can take days to complete. This is particularly useful for international transactions, as cryptocurrencies allow people to send and receive money quickly and easily across borders. Privacy and anonymity. Cryptocurrencies also offer a high degree of privacy and anonymity, which is not possible with traditional bank accounts. This can be beneficial for people who value their privacy or who live in countries with strict financial regulations. Transactions on the blockchain network are recorded anonymously, and users are identified by their public keys rather than their real names. Security. Cryptocurrencies are also known for their high degree of security. The blockchain technology that underpins cryptocurrencies is incredibly secure and transparent, making it difficult for hackers to manipulate the system. Additionally, cryptocurrencies use advanced encryption techniques to protect user accounts and transactions from fraud and theft. Accessibility. Finally, cryptocurrencies are accessible to anyone with an internet connection, regardless of their location or financial status. This is in contrast to traditional banks, which can be difficult to access for people in remote or underprivileged areas. Cryptocurrencies offer a new, innovative way for people to manage their finances and participate in the global economy. A big question many are asking: why are banks failing? The reasons for the failure of centralized banks can vary widely, but some of the common factors include poor management, financial instability, fraud, and macroeconomic factors such as recessions or market crashes. Here are some of the key reasons why more centralized banks may be failing. Poor management. Centralized banks are complex organizations that require skilled and experienced management to run effectively. When banks are poorly managed, it can lead to inefficiencies, financial losses, and even bankruptcy. Poor management can also result in unethical behavior, such as fraud or embezzlement, which can further erode public trust in the institution. Financial instability. Centralized banks are vulnerable to financial instability, particularly when they take on excessive risk in their lending or investment activities. When banks make risky loans or investments that turn sour, they may experience significant losses that can threaten their solvency. Additionally, banks may face liquidity issues if they are unable to meet the demand for withdrawals by their customers. Fraud. Centralized banks can also fail due to fraud, either by internal staff or external actors. Fraud can take many forms, including embezzlement, money laundering, or Ponzi schemes. When banks are unable to detect or prevent fraud, it can lead to significant financial losses that can threaten their viability. Macroeconomic factors. Centralized banks are also vulnerable to macroeconomic factors, such as recessions or market crashes. When economic conditions deteriorate, it can lead to an increase in loan defaults, a decrease in asset values, and a decline in overall economic activity. This can put significant pressure on banks, particularly if they have a high level of exposure to risky assets. Competition from fintech. Centralized banks are also facing increased competition from fintech companies, which are using technology to offer innovative financial services to customers. Fintech companies are often more agile and customer-focused than traditional banks, which can make them more appealing to consumers. As a result, centralized banks may need help attracting and retaining customers, particularly younger generations who are more comfortable with digital banking services. Centralized banks can fail for a variety of reasons, including poor management, financial instability, fraud, macroeconomic factors, and competition from fintech companies. As the banking industry continues to evolve, we will likely see further changes in the landscape, with both centralized banks and fintech companies competing for market share. Conclusion. While cryptocurrencies offer many advantages over centralized banks, it is still unclear whether they will ultimately replace traditional banks. There are still several challenges that cryptocurrencies face, including regulatory uncertainty and volatility in the market. Additionally, cryptocurrencies are still not widely accepted as a form of payment, which can limit their usefulness for some people. Despite these challenges, cryptocurrencies are here to stay and will likely continue to play a significant role in the global financial landscape. As more people become aware of the benefits of cryptocurrencies, we may see a shift away from traditional banking systems towards a more decentralized, innovative financial system. Thanks for watching. Like and subscribe for more great crypto content.